back. Well, let's put the spotlight on Anand Rathi because that's the stock which is reacting to earnings. Mr. Rakesh Rawal, the CEO at Anand Rathi Wealth, joins us on the show to talk to us about their earnings. Hi, Rakesh. Good to be speaking with you. Well, sequentially, the numbers have come largely flattish. What led to this moderation, and what's the expectation from Q4 now? Are you expecting a bit of a reversal or a recovery, or do you anticipate more of the same?
Firstly, good morning, everyone. And we in our company, what we look for is year-to-year growth, and that's why we have a very good first quarter, and then we have flattish other quarters. From a year-to-year growth perspective, we've maintained the 30% plus growth in both revenues as well as in profits. I personally believe that the revised guidance that we have given of about 900 plus crores of revenue and 290 crores of profit, we believe we should be able to deliver that.
Yeah, not only deliver, but is there a potential that you can beat that because you've already achieved more than 75% of your revenue guidance? The AUM, what you've talked about, 80,000 crores is pretty much there. Are you looking at upping that by any chance?
We're a little conservative in our approach. So I think that we'll retain that guidance and, of course, put in our best efforts like we've always done.
So Rakesh, let's divide this or spell it out into numbers, because despite the market volatility that we saw in the third quarter, especially on F&O volumes, the street's been quite bullish on specifically the wealth management segment of your business. You've stated that there will be a 20 to 25% growth on a long-term basis. What new levers, A, do you see pushing the growth forward, and B, would you stick by with this 20 to 25 range of growth?
Yes, I've maintained that for the last several years now, and I don't see anything structurally changing for me to reverse that position. And I don't think that some changes in the short term affect that in the long term. And as I've said that, we manage 76,000 crores. The potential with HNIs runs into several lakh crores, So therefore, we're not even scratching the surface. So in terms of potential, there is massive potential for growth of our business. And the second thing that I've always said is that we have a client strategy which has given them returns in the range of 14% odd. Yeah. So if that strategy delivers, which it has done for several years, the 14% growth in our business is market driven. Thereafter, I have to add another 10% growth in terms of new monies and new clients. That's not too difficult to do. And therefore, I continue to maintain 20 to 25% growth in the long term that we should be able to do without too much stress. I maintain that.
So, help us understand, because, your active clients grew by about 19%. You saw a 61% jump in relationship managers as well. Do you plan to see an uptick in these numbers going forward?
Most certainly, most certainly. I think that my capacity for every RM is in the range of about 50 clients per RM. And we are utilized to the extent of about 60 odd percent. So there's 40% capacity within our existing system to add more clients. And so therefore, I think that we will continue to have a robust client acquisition, as well as, since most of our RMs are people who worked with us for 3-4 years as account managers, passed out from good colleges, including the IIM chartered accountants, who we promote as RMs. So my pipeline for the next set of RMs is within the company. It's not sort of dependent on my recruitment from outside. So I see a robust growth in RMs. I see a robust growth in acquisition, and which will all add to the overall 20-25% growth in business.
have the next set of RMs already in place. Customer acquisition pipeline looks good. But what about the digital efforts? Because of course, it's all about having the best user interface at this point of time, the least amount of glitches and all of that. What kind of investments are you making, and any new products which are lined up as well?
Our belief on digitization is that digitization, or technology, as we say, has two parts. One is technology that can improve our value to customers, yeah, and technology which will make the interface more attractive. And we have always emphasized on technology which creates more value. And we have taken a lot of initiatives in that area, led by our Deputy CEO, Feroz Aziz. And you will see a fair degree of output in terms of better, shall we say, advisory for customers through this technology over the next few quarters. So I think technology, the way it should be used, is to create value, that we are on stream to create more and more value. In terms of products, we are always open to new products, provided they help us in achieving our strategic objective for customers of 14% at betas of 0.5, 0.6, 0.6.5. So if we can find something that will help us in bettering this equation, we will most certainly do that. But at this point in time, we don't see too many.
Okay, on that note, we let you go. Thanks so much for making time and speaking with us. Always a pleasure.